Hey guys, this is Tony Benson with Wealth Builders HQ and creator of Patterns in a Flash. We're going to take a look at the pattern of the week from last week and do a quick review on it. But before we do that, you all know we got to do the disclaimer. I'm not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything that we do here is purely for educational purposes. If we do mention a trade, a specific trade, just assume that it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading here. So the stock that we looked at was a flag on BMY, Bristol Myers Squibb. And this is a funny one, actually. We had, I don't know if I'd say funny, but it was certainly interesting. The back here, this beautiful little trend. You can see the line there, hopefully. When it broke, I remember seeing it and going, yeah, it's probably going to go lower. And not only did it go lower, it went a lot lower. This is the break right here. And it gave a beautiful little world reversal, and it just tanked. But you never know what's going to happen, right? It doesn't very often happen that something tanks that quickly and that fast like it did here. So I was a little cranky with Bristol that I missed that trade. Probably should have been in it, but woulda, shoulda, coulda, right? Do it all the time. Happens all the time. In fact, I didn't even catch this one either. Because sometimes, right, like Ford is another one. It was in a flag pattern, but it went so far sideways, it just kept going, and you kind of lose track of it, right? You move on to other trades. Lowe's was another one. I just looked at Home Depot, mostly Home Depot for the pattern of the week this week. So if you missed that, get Patterns in Flash, and then you'll have it in a timely manner. Otherwise, I just review it a week or two later. But we had this nice, big, giant rally back from BMY. BMY sold off, dropped all the way down here to 52 from 66 in a short period of time. And this is a pretty classic sell-off. This is a capitulation move. And you see the volume and how the volume spiked. It dropped from 58 to 52 very quickly in 5, 6, 7 days. And the volume accelerated. That's not a blow-off move. Blow-off moves at the top. What's a capitulation? So this is a very classic capitulation move. And then V-bottoms are not common, but they do happen with capitulation. And it rallied back up. It did have another sell-off day, but the volume got lighter. We had big volume on the rally back to the upside. So obviously, there was somebody with enough capital sitting there saying, we like it down here at $52. If it gets down there, we'll buy it. And they load it up. Sells off for a day, and then boom, it takes off again with very solid volume. And then, because they'd sprinted up a hill so fast, they were probably a little tired and needed to catch their breath. So it's been going sideways for a while. They noticed it, where was that? I think it was the 5th, if I remember right. So yeah, it was that day right there that I highlighted on the pattern of the week. And so we got a flag pattern here for breaks to the upside. This is the trading plan we instituted, put on there. Like I say, I got busy with other stuff, and it happens all the time. So even though I get cranky, I beat myself up over this sometimes. You got to be careful what you're saying to yourself, right? If you miss it. But like I said, I missed a ton of them. RRC is another one. Lowe's, I missed a big bullish move on Lowe's. What was the other one? You miss them all the time. The question isn't what you miss and getting upset about the ones you miss. It's which ones do you catch. And I've caught a lot of really big downward moves lately with the market dropping the way it has over the last month or two. And I've been relatively bearish and looking for this kind of a move. I've caught some massive trades. It's just been awesome, right? So I've got some good upside trades too. I mean, I popped NEM from 52 to 58 or whatever it was. So it's not, again, the point is not to focus on what you miss and get upset about it, even though it's easy to do that. Focus on what you do get and make sure that you're paying attention to that. But the plan was beautiful here, and it's sitting right at 65. Obviously, it gapped down a little bit yesterday, but it looks like with the amount of momentum we had, you see the volume spike. With the amount of momentum, and then yesterday with the light volume on the doji day, this thing's still bullish. So if you happen to be in the pattern of the week, if you did get this, I'd be putting a stop right here, probably about 64, maybe a little bit, maybe below the lows of the other day. So even if you get stopped out of this thing, if it does roll back over, then you stop out. You should have a little profit, probably not a ton, but you should have a little bit of profit in. If you trade the stock, you'd obviously have some profit. If you're trading an option, you can have a tiny bit of profit, maybe 10 or 20 or 30 cents, depending on which option you bought, obviously. But I'd move the stop up for sure and just keep an eye on it. And then if it stops you out, it stops you out. If not, just let it go. And who knows how far it could run. I don't think it would go too much above this because I think that's an all-time high. But who knows? I mean, it's not an all-time high. So there is some potential for it to go to 80. And with the economy getting shaky and CPI high, inflation high, drug companies a lot of times are a safe haven. right? If you're in tech and you're in companies that are interest rate sensitive and you want to put your money in a safe bet, then drug companies often are those places because people are going to keep buying their drugs. They have to, right? And a lot of it's funded by the government anyway, right? The government buys people their drugs. They pay for it. They fund it essentially. So they are considered by many to be a safe haven when the economy gets weak. So, and we are definitely getting weaker as we go. So how bad it gets is the question. So that is it for the Pattern of the Week review. Let's finish off like always, right? If you're going to fail at just one thing, fail at quitting. Y'all take care. Bye-bye.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I put together just for you.